All right, folks, this is part 5 and the final installment for the Inner Circle Trader Market Maker series for the YouTube channel. I'm going to be teaching on daily bias and generic market macros. All right, so we've been teaching on the British pound versus US dollar in this series. It's relevant to the time of this recording. Those of you who are watching it as I'm producing it are looking at your chart, you'll be able to see all these things as well. But those that don't have that benefit and can't go back and look at 5-minute charts because some platforms don't let you do that, this will help fill in that little gap of education. Plus, I'll amplify some things on the lower time frames. So we're looking at Monday, July 26, 2021 on a 5-minute chart. Opening price at midnight. Price meandering around, trading down into London, taking out short-term low. As soon as that happens, you want to see, does it show a willingness to want to rally? It does. Then retraces back down again, takes out a short-term low. Again, that would be an area where you could be a buyer. Rallies above. Now it takes out the initial high of the day during London Open Kill Zone. This right here is where retail traders like to buy that, and they have to suffer through all this retracement. You want to be buying below the opening price or wait for a run above and then come back down into the open price. Now we have optimal trade entry there. Price shows displacement to the upside, creates relative equal highs before New York Open Kill Zone, 7 a.m. New York local time. Market drops back down below a short-term low. Optimal trade entry from this low to high. OTE is right there. You can pull that up on your own fib. Price runs the relative equal highs, trades into London close time period noon, shuts the door, high of the day is formed. All right, Tuesday of the same week. Remember, all of this is framed on the bullish weekly expectation to run into that buy-side liquidity pool. So the week's bullish. We already looked at Monday. Now here's Tuesday. Opening price here. We want to see it trade down first because that's a Judas swing. A Judas swing catches traders off guard. And they generally aren't looking at this as a buying opportunity. They're thinking it's going to keep going down. It goes down into the heart of London Open. So the low forming below a short-term low here. Rallies, short-term break there. So now we have optimal trade entry with a break in market structure in a bullish week and on Tuesday. Price starts to rally up. Trades right back to the opening price. Sells off once more. Rallies again and optimal trade entry. Rallies aggressively through the initial highs of the day. Again, London close time period between 10 o'clock in the morning and noon, New York time, creates the opposite end of the daily range. Goes a little bit higher later in the afternoon, but not by much. Try not to get so obsessed about getting the absolute highest high. And if you can capture a portion of this move here, who cares if you get out the actual high here or here? If you caught either the New York or the London, that's just a phenomenal trade. No matter how you slice it, that's what you're looking for. But this is how we're operating on an intraday basis inside a bullish market environment in a market that's shown a willingness to be bullish because of SMT below sell side liquidity pool in the daily chart. It's wanting to go higher. It's clearly reaching for some measure of buy stops. And we've outlined that on the weekly chart. And we're going to continuously look for buying opportunities until we get up to those buy stops. On Wednesday, July 28th, 2021, this is FOMC Wednesday. So we're seeing price back and forth. Every short-term high takes out a previous short-term high. Short-term low takes out a short-term low. High above this low, gets taken out here, and we trade back up to here. So it's going back and forth, not letting any position stay safe. And then we go into the dive in New York, rallies up, and then closes the end of the day with London close. But FOMC is 2 o'clock in the afternoon. So we see it trade down again, taking out the short-term low, and then it rallies. This is seek and destroy. Okay, seek and destroy is a market profile where it's literally taking out short-term highs and lows all day long. Then finally at 2 o'clock in the afternoon, when the manipulation enters the marketplace, it takes out the low of the day. Why? Because I taught you before a market has a directional move that's strong in nature, that's really animated, bullish or bearish. If we're bullish, anticipate a low being taken. And you see what's happening here. It run down, the algorithm cleans that low out, then it goes higher. And you've seen me do the entry right in here, and you watched me take a trade and recorded it with TradingView with that idea after it took the low out. I felt confident trading it and attacking that buy side liquidity pool at 139.10. On Thursday, 29th of July, 2021, price had already started rallying in the afternoon of the previous day after FOMC announcement, and we had a little bit of a drop down on Thursday, but we're not going to reference the opening price on Thursday because we're so late in the week. We're focusing primarily on buying below the opening price in bullish weeks on Monday, Tuesday, and Wednesday. Bearish weeks, we're looking to sell short on Monday, Tuesday, and Wednesday above the opening price. On Thursdays and Fridays, we're not factoring that in. London, we have a price run here and trades back down into optimal trade entry. Rise again, consolidates a little bit. And in New York, we come very close to the high of the day, but London close creates the high of the day. Again, London closes 10 o'clock in the morning to noon, New York time. Then we fall off. Going into noon on Thursday, which brings us to the day of this recording, Friday, July 30th, 2021. This level here is Thursday's daily high, okay? So we have relative equal highs here and then previous day's high. We've been in a week that every day has gone higher. We've already been well above our objective, which is this level here for buy side liquidity, framed on that weekly chart. London, we trade down. Notice that we were just a little ahead of the beginning at 2 o'clock in the morning. Trades a low there, retraces back down again here. Rallies, sweeps Thursday's high. Now, we have pressed every single day higher. Now we're on the last day of the week. The algorithm will likely trade back into the weekly range. When can we trust that? Well, we've swept Thursday's daily high. Go back, here's the low prior to that run. So we have this low and the highest high of the week. Market breaks down below that low right there. Then trades right back up into the last up close candle. Why is this a bearish order block? Because we've taken out previous day's high. We've worked the whole weekly range bullish every single day, and expectations will be a retracement back in the daily range. There's less likelihood of continuation on the upside this late in the week after it's gone so far above our objective, which was down here. So here we have a market structure break there, rally back up into bearish order block, which is another optimal trade entry. New York session, we see it break lower again. A strong break in New York there. Optimal trade entry, high, low, retracement. We have a low here and we have a low here, relative equal lows. It breaks down and attacks that old high and returns back to that area to consolidate. So all in all, we've watched how the algorithm will seek liquidity take that liquidity. Once that liquidity has been taken, it will look for opposing liquidity. We saw how the daily chart on pound dollar traded lower to take out its relative equal lows, and below that was sell stops. So now, if they went down to take those sell stops and accumulate them as longs for smart money, where does smart money want to unload? Above this line here, that 139.10, which was the weekly buy stop liquidity pool. And we traded 80 plus pips above the 139 big figure. Cleaned out Thursday's high of the day forming, and then we break down. And all of this here is classic. This also, if you look at the consolidation here, this is original consolidation, accumulation, reaccumulation, smart money reversal. Where's the smart money reversal occurring? Above Thursday's high, which is the high of the week. Then we break down. Took out that low. This becomes a low risk sell. Distribution, redistribution, below the original consolidation. Boom, market maker sell model. Where's it trade to? The old objective we had all week as a buy side liquidity pool. Everything fits together, folks. It may not feel like it right now. It may feel disjointed because you're just now starting to get serious about learning this. All these moving parts have their place in the grand scheme of things, in the great machine that is the algorithm. All these little pieces and components fit together. And once you understand it, it gives you clarity that is unrivaled. So hopefully you found everything in this series insightful, inspiring to try to get you into these other supportive lessons that's already been made available to you in the YouTube channel. Dig into them. Really take notes. It covers a lot of things on how to study, what you should be studying, what things you should be avoiding, times and days that look for specific things. I touched on a lot of that in this series. And literally, if you just followed this series, there's no reason why you can't carve out an income. Now, am I saying you're going to get rich? No, I can't say that. Can you make an income off of this? Absolutely, I believe you can. In fact, I have students all around the world that did not even join my mentorship. They've never seen a mentorship video. They have no idea what I'm teaching in there. They've only studied this content on the YouTube channel. They are independently making their own money without any insight from me, no hand holding. I'm not telling them what to do. They're doing it all on their own. And nothing can make me more proud than that. The fact that I've given you my time, I've shared my life's work with you all, and you've had the opportunity to test it for free. All you had to do is go into these videos and test it and see if what I was saying was true. Was it really in the charts like I said? And those diligent individuals all around the globe that put that challenge to the test, they discovered that this is in fact really what goes on. And some of them have went on to get funded, and now they're trading with the amount of money that they probably would have never been able to save up to do. And they're getting checks, they're getting payouts, they're getting inspiration every day because of the things that they're doing all by themselves. It has nothing to do with me. I don't want that credit. You're taking that risk. You pursued your passion. You believed in yourself learning this. And I should never be credited for your success there. That success, you earned it on your own. And those of you that are doing that, I'm so proud of you. I'm so proud of you. And I can't wait to see more success stories. Until next time, good luck and good trading. You can use all this information also to get in sync with what I teach in this YouTube channel, which is a one shot, one kill. This is the Wednesday FOMC day. And you can see this candle here. I went long. The fill was 138.65 and 2 pipettes. So as we dropped down, we swept this low and then we went back down into it again. I trusted the fact that we didn't want to go back below that low, and I went long there. Rallied higher. I took a partial there, and I took a partial there. You see this in the recording on my Telegram channel. And then I also left 500,000 leverage on the trade with a limit order at 139.50. I took a partial there. 250,000 came off, and the final 250,000 came off on a limit basis at 139.51 and 1 pipette there. So this is a typical one shot, one kill, where I'm aiming for anywhere between 50 to 75 pips a week. And that's it. If I wouldn't have traded earlier in the week on Tuesday, this would have been enough by itself. But I did something on Tuesday with Pound, with my mentorship, and you all saw this one here. Using everything that I've outlined here from beginning to end, everything I used was literally YouTube level. It's not secret, mentorship stuff. Everything here is taught somewhere in my YouTube channel. Now, I get a lot of emails, and it takes forever for me to get through them. And it's gotten to the point where I'm probably never going to get caught up anytime soon. There's just so many of them coming in. But I can tell you that if you have the question in mind that where is a certain thing taught, I don't know specifically what videos, because I've done so many videos. I didn't keep a good record of what I did in each video. Years ago, some of my students were doing a really good job of documenting what's covered in what video, and even what minute marker it would be. I don't know what that is. And maybe when you're doing your studies through this channel, when you study your videos, each time you come to a specific thing, you might want to break down the video and kind of like do it as chapters, like between minute marker this and this, ICT talked about this or that topic, or order blocks, or breakers, or mitigation blocks, all those types of things. It'll make it easier for you to go back in and locate those areas to touch up on a subject matter that may be a sticking point or a struggling point for you. Obviously, there's a whole lot more to trading, and I could have took a lot more out of the free content here and made much more out of this series. But I literally watched the Market Maker series this week all over again, and I had a lot of talking in those videos. And while most of it's useful information, I wanted to kind of give you a rendition that was more to the point, that goes right to the heart of what all these videos should have given you an understanding, and then what should have been taken away. And this isn't everything. Like, I could have put even more into this. But I wanted to give you something that is useful, that I used in real world settings, where in front of lots of people, okay, all around the world, they watched me co-sign this whole idea this week. And it panned out, and it delivered like gangbusters. It's not a fluke. I could have talked about this and it could have flopped. But because it's rooted in the things I'm teaching you here, which is also taught in other areas of this YouTube channel, it's not created just because this stuff worked this week. Okay? It's literally every single week, these markets operate with these specific generic macros. A macro is a small little program that unfolds in an algorithm. And what they are is basically a price run from one level to the next during a specific time of day. Okay, that's the easiest one I can give you as an example. Another would be when it's bullish, a bullish optimal trade entry that forms between 7 o'clock in the morning and 10 o'clock in the morning New York time and runs to 10:30 in the morning. Okay, that repeats a lot, several times a week. But I'm teaching you as my students to focus on the highest probable day of the week in the most probable direction, bullish or bearish, and the time of those specific days and what those patterns of entry look like. There's other things, once you've gone through this series a couple times, taking copious notes, you want to go back into lessons where I talk about money management. I have psychology lessons in here, trade psychology. I have lessons on how to deal with drawdown, because you're going to have it. No matter how good you think you are, you're going to have drawdown. And how you're going to manage that, how you're going to overcome that, how you're going to mitigate those losing streaks. I teach that for free in this YouTube channel. I am convinced that everything I've given for free in this YouTube channel literally lays waste to everything out there you can buy as a course. And that's barring no mentor. None whatsoever. Because it's free, you can test drive it here. You can see right away if there's any fluff. There's a lot of talking, but the talking points are important because I'm actually addressing psychological factors that's going to either arise from the things that I'm telling you to do in the video or from a previous video that I got feedback from. When I do a video back then, when I was doing those videos, I was able to read my emails a little bit more quickly and keep up with it. Now, I just, with over 120,000 students, and I have YouTube channel audience too, I personally cannot keep up with the correspondence. I wish I could because I love it. Sometimes it moves me to tears because of the joy I get by hearing these stories. And also the stories that people are struggling. Not every one of my students do exceedingly well. I'm going to be upfront and honest and tell you that. I've said it in the past. It's not like something I'm going to just confess to now. I've always said this. This is a very difficult business to do well in because you're competing against yourself. You're misinformed. You're giving so much improper information. And there's so many people out there masquerading as someone that knows what they're doing. And all of that is a disadvantage for you. And it's almost like a landmine field laying in front of you. And you really need to know where to step. Because if you step the wrong place at the wrong time, it's over. And if you do it enough times, no matter how strong you feel about conquering this and knowing that there's going to be periods of adversity, at some point, even the best of you will want to throw in the towel and quit. I'm here to tell you, don't ever quit. It doesn't cost you anything to watch these videos except for the time that you invest. If you keep digging into them and keep practicing what I tell you to practice and keep studying and looking for the things I'm pointing to, it will happen for you. It will unlock your understanding, and one day, what day, I don't know, but it's always different for somebody else. And I have students from my 2016 group that still cannot make money. I'm being absolutely honest. But I also have students that just came into this final group in 2021 that are literally killing it because they were trading with information they learned here, but it was hit and miss. Now they're doing exceedingly well. Was it because they joined the mentorship? Probably. Or is it because they put enough time in beyond what they probably thought was going to be required? I think it's that. So don't give up. Don't let someone else convince you that you're wasting your time doing this. The worst thing you can do is tell your friends and your family what you're doing. Don't even do that because they're not going to understand. And they're going to be asking you, usually at the wrong times, hey, how you doing? You're so-and-so. And it'll be a period where you're struggling. And they'll be like, well, I'm glad I didn't listen to you. How's that going to make you feel? It's going to make you question whether or not what you're doing is a viable means of pursuit to a better life. When I'm telling you, it absolutely is. This is the last bastion, folks. Look around. I'm not going to describe what I'm really hinting at, but all you have to do is look around. Every form of employment is being ravaged right now. It's going to get worse. Do you have a hedge against that? Do you have a way for you to feed you and your family without having to leave your house or hold your hand out for a government handout? No subsidies required. No leaving your home. As long as you have an internet connection and equity in the account, you can eat. That's where we're at now. It's not about getting rich. It's about making sure that you can eat, that you can meet your bills, make your ends meet. So it's my prayer and heartfelt desire and passion to inspire you to do well. And hopefully I've given you some tools here to do that, or at least begin the journey and working towards it. You're always in my prayers. I'm always thinking about all of you. Even I don't know you. I've never laid my eyes on you face to face, never shook any of your hands. I'm rooting for you. And you'll get it. Just keep plugging. Until next time, be safe.